In today's episode, I'm going to teach you how to spot a pump and dump scheme in the market so you can avoid taking unnecessary losses. Now, a lot of beginner traders, including myself, get caught in pump and dumps when they're getting started because we're naive. We don't know any better. But that's not going to be you after today's episode. Now, just today, we had a stock that went up over 1,000% with absolutely no news. It went from $4 to over $40 a share. And guess what? It was a pump and dump. Now, when I first saw this stock squeezing up, and we'll look at the chart in just a second, I thought maybe, just maybe, this was actually a short squeeze. But you know what's really interesting? The vehicles that are being used for these pump and dump schemes, they're mostly Chinese stocks. This was a Chinese stock. And the people running these schemes, they're foreign nationals. They're not US residents. These are people that are international, and they're using these stocks to produce a lot of profit to fund their international organizations. Now, how do you, as a retail trader, avoid getting caught in this drama? Because here's the problem. You do not want to get caught in one of these stocks when they start dropping. Because I will warn you, I have seen them drop as much as 95% in a single day. When the liquidation begins, the bottom falls out and they drop. And a lot of beginner traders will be a deer in the headlights because they don't know what to do. They've never seen a stock drop this quickly. The losses, they start getting bigger and bigger and bigger. Fear sets in, you panic, and you just hold. You hold, you hope it's gonna bounce. And they don't bounce. They keep dropping. Let's jump onto the screen share and look at this chart. So this is the stock today, CHSN, Chinese small cap, ends up going from $4 a share to over $40 a share. And now it's back down at 12. So it's dropped 60, 70% off the highs, and it may drop quite a bit more. So when I first saw this stock squeezing up, I actually wasn't sure whether or not it was a pump and dump or just a classic short squeeze. And this is our first order of business. We've got to be able to differentiate a short squeeze, which is when a stock basically goes like straight up. Do you remember GameStop, GME? That was a short squeeze. We love short squeezes. By the way, my name is Ross Cameron. I'm a full-time trader. I took my first trades in 2001, more than 20 years ago at this point. I got interested in the market during the dot-com bubble. So I've been around the block. I've seen a lot of this action, and I can share with you what I think is going on. In fact, during this episode, I'm going to expose the pump and dumps that are happening in these international stocks because they're going on almost every single day right now. And that's got to put you on alert because you got to be careful, because I don't want to see you take unnecessary losses. So GameStop, that's a short squeeze. We love that. Traders took huge short positions right here, and as the stock starts to squeeze up, they're forced to cover for a loss. The higher it goes, the more they have to, well, the bigger their loss gets. They've got to buy back shares, and as they buy back, their buying is actually fueling the price going higher even faster. And you know what I think is happening with some of these pump and dumps? I think that these scammers are getting very sophisticated, and they're actually trying to trap people into going short so they can squeeze them out and almost force a short squeeze. It's really unbelievable. So when you look at this, the challenging thing really is, this clearly is volatility. And as active traders, we love volatility. So could you have traded it? Should you have traded it? Well, clearly, there was opportunity to trade it to the long side going up. This thing went from 4 to 5, 6, 7, 8, 9, 10 to 15, back down to 6, back up to 18, back down, all the way up to 30, back down to 20, up to 44. And then, well, it kind of rolled over and has now been unwinding. So there was opportunity to trade it to the long side going up. There was opportunity to short it, trading to the short side, coming back down. Now, I think that one of the things that is amplifying this type of volatility is the easy availability of shorting. Shorting is something that wasn't as big in the market 10, 15 years ago. Now, it was certainly highlighted by GameStop, AMC, and many of the other stocks that made these big moves. Those were short squeezes. They weren't pump and dumps. But here, I think we're seeing a little bit of a combination of both. Now, I want to play an episode for you on naked short selling. This is a practice that is very controversial. It is illegal to naked short sell stocks, but it's happening in the market every single day. Why don't you check out this video? This is a clip from Gaming Wall Street, the HBO documentary, and this is a former Morgan Stanley employee talking about naked short selling. Let's listen to what he said.
Folks that are still, in the industry, and they've been like, I wouldn't advise you to talk about it, blah, 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 blah. But I think that they're living, they're all living in kind of a fake world. I would, illegally naked short sell stocks every day, as long as I was collecting commissions.
So I think that that's a pretty powerful statement. What he's saying is that he was naked short selling stocks every day as long as he was getting paid. What that means is that in order to short a stock, you have to have shares that you borrow from someone else. And with a lot of these small Chinese stocks, there's not a lot of shares available, period. And there's not a lot of shares to borrow. But if there's brokers out there who are willing to go to naked short sell and just print those shares and let other people short them, then effectively they're setting up the potential for an epic short squeeze where suddenly they're letting people short an infinite amount of shares against a stock that has the potential to go up 1,000% in one day. Imagine that. Think about that. I mean, you short 10,000 shares, it goes up $10 a share, you're down $100,000. You do that with 100,000 shares, you're down $1 million. You do it with, you like, think about how quickly this adds up. You do it with 1 million shares, you're down 10 million, 20 million, 30 million, 40 million, 50 million, 100 million as these things squeeze higher. And in fact, I'm going to show you an example today of a stock that actually went from about $20 a share to over $2,500 a share. Was it Chinese? Yes, it was. Was it a short squeeze? It might have been. It's hard to know for sure. Was it a pump and dump? It might have been that as well. How do you manage risk as a trader in these markets? That's going to be the question that we're going to answer in today's episode. So now if we go back to this video, he's got more to say. Oh, let's not cut him off. He's actually got some more he wants to say about naked short selling. Let's listen.
And the bank did not care. The client will send you an order electronically. All you do is you click on the order, you go to execute, it'll pull up a little box, you type in anything you want, and you just hit okay. You don't ask questions. You appreciate the order. And if that involves shorting a stock naked, you do it anyway.
You do it anyway, right? So this video has made the rounds. A lot of people have paid attention to this because this has been an admission that these big Wall Street banks, they feel like they can kind of do what they want. Now, we know in the case of the GameStop short squeeze that Melvin Capital lost $6 billion during that squeeze. And the only reason that squeeze stopped was because the big brokers, they changed the rules. They took away the buy button. Now, they said they did it because of their capital or collateral obligation to their clearing firms, which may have been legitimate, but nonetheless, it felt like they changed the rules in the middle of the game to accommodate them being up against the ropes and maybe the hedge funds being up against the ropes. So all of a sudden, us as retail, we get the rug pulled out from underneath us. So we always have to be thinking, how can we manage our risk? In a market where naked short selling is going on, in a market where we're seeing these Chinese pump and dumps, what is a trader to do? So let's go ahead and jump into today's slide deck. This is a full-length class. I think you guys are really going to enjoy it. And we're going to start by talking about how to identify a pump and dump. All right, so CCTG, this is another Chinese pump and dump. It was a confirmed pump and dump. There was no question about it. That's what it was. So let's talk about the pump aspect of the pump and dump. The pump is orchestrated across social media, Facebook, Twitter, WhatsApp, and Telegram. And that's very sophisticated. The way this works is we're actually seeing these scammers running ads. This is an ad right here that was run using my profile picture right here and a fake account set up that looks like me. But that's a fake account. That is not my account. It's not a verified account, right? So I have seen these, not just for me, I've seen these for some actually, like, I've seen them for Bill Ackman. Let's see, I've got one right here. This was Bill Ackman. Imagine this. Bill Ackman, founder of Pershing Square. I've decided to join Bill Ackman on the journey to innovation. He's going to be now sharing his investment tips with a new group on WhatsApp. Huh? Yeah, no, that's BS. It's a scammer. And what's really, really BS about this is that, you know who's getting paid? Facebook. Facebook gets paid. Meta gets paid from these scammers spending money running ads to solicit people into these groups. Now, we have a system at Warrior Trading that we use for, I guess, trust and safety to try to get these accounts shut down as quickly as possible. But as quickly as we try to shut them down, a dozen more open. It's like, it's impossible. They are so sophisticated, and it seems like these social media sites, they're not doing, I don't know what they're doing to stop it, but we see it on YouTube, we see it on Facebook, we see it on Twitter, we see it on Reddit, and then they're using WhatsApp and Telegram to start to communicate with these people that are in their system. So the way they begin the pump is first they get a group of people in a WhatsApp. So they run these ads, they're soliciting all these people, and when you click on the ads, I actually went and clicked on to see what would happen. So it sends you into this little page right here where, you know, this is a fake account, it's all this blah, blah, blah stuff, and it sends you into a WhatsApp group. Again, not me, not a real Warrior Trading account. And when you're in the group, now you start talking with this person, Sophia Taylor, my quote assistant. This is all BS, as you can imagine. And they start telling you these are the transaction records. So this was from December. This is from last year that I got this screenshot. And they were purporting that these were the recent trades that they had taken. And they said, we're going to be sending you a trade soon. So essentially, they hook you in with these psychological tactics. They're going to show you the history of profitable trades. They're going to tell you you're going to make a profit guaranteed. And then all you have to do is wait. He says, I recommend about 5 to 8 big rising stocks every month, about 1 to 2 every week. The profits of these stocks are about 15 to 50% or even higher. Now, I can tell you that these people don't speak English as a first language. So just the whole cadence, the language, I mean, if you read into it, you could tell pretty quickly these are not English as a first speaking language people. So then, this is kind of crazy. He says, these are some precautions to keep in mind. He says, the stocks I recommend are obtained through inside information. Please do not tell others about it. And when I first saw that, I was like, are you kidding me? So you're going to tell people that this is insider trading, essentially. I was like, how crazy is that? And I said, no, you know what he's doing that? He's doing that so you become complicit, so you maybe won't report him to the police, which, you know, of course, would not be good for them. I said, oh my goodness, that sounds like insider trading. And he goes, shh, 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 shh. So, all right. And I'm sorry to laugh because it's just so absurd. So anyways, he says, so I'm just playing along because I want to know what's going to happen next. So then he says, CCTG is today's insider tip. He sent that on that particular day at 9:58 or 8:58 a.m. He said, please wait for my notification regarding the buying price and do not operate without my permission. He's very bossy. So I say, okay. The price will adjust later. Please wait for my message. And then he says, buy at current price. Now, here's the thing that was amazing. Because I had gotten this message from this scammer who was part of the pump and dump group, I knew that CCTG was probably going to get this alert at some point today. So I started recording the level 2 of the stock, the depth of the market. And what I noticed was all of a sudden at $8.50, if you look at this, at $8.50, I noticed 100,000 shares suddenly pop onto the ask. They're sitting there on the ask. And guess what happens a moment later? Buy at current price. This was 10:15 and 17 seconds. Less than 4 minutes later, I get the notification, buy at current price. And they're probably sending this out to thousands of people. So all of a sudden, I see that and I'm like, I knew it. And he says, after the purchase is successful, send me a screenshot so that I can notify you when it will be sold. And I sent him this really blurry screenshot just because I didn't want him to, you know, I don't know. And then he says, I can't see your picture clearly. I was like, so I kind of was playing around a little bit. But as soon as he sends this out, all of a sudden, we've got this 100,000 share buy order. And guess what happens? The stock squeezes up. That buy order is gone. So that's 100,000 shares at $8.50. That order is gone. Boom. So all of a sudden, cha-ching, they're printing $850,000. It's an $850,000 So let's see, 10,000 shares would be, 1,000 shares would be 850, 8,500, 10,000 shares would be 85,000. Yeah, 100,000 shares would be $850,000. Golly, that's a huge position. I don't trade positions that big. I don't even do the math easily on the top of my head. So that's a $800,000 position. So someone in that moment, cha-ching, booked a profit. Now, we don't know what price they were in at, but we know they were in at a much lower price, enough that that was a profit. All right, so all of a sudden it goes out. Now, guess what happened today on CHSN? CHSN, I saw it on Twitter, CHSN, today's exclusive pick, CHSN, buy price, $2.86. Use cash in your account. After setting it up, just wait for the transaction. Please send me a screenshot of the order when it is completed. Boom. So this stock, CHSN today, was part of another pump and dump scheme by these WhatsApp scammers. And this continues to happen. Now, I think at a certain point, regulators are going to step in and try to figure out why this is happening. Now, why is it happening specifically on these international companies? Is there a reason? Is it a coincidence? It's not a coincidence. There is a reason, and I'm going to share it with you in today's episode. And it's something you have to be cautious about. But we still have the question of, this is volatility. Should you have traded it? Now, I actually didn't know whether or not this was actually a pump and dump or a short squeeze until later this evening when I was doing my research, and I was finally able to find someone who posted a picture of a WhatsApp message. Because earlier, I was seeing lots of people trading it. Well, traders were buying it, traders were selling it, they were shorting it, they were trading it, because this volatility is an opportunity, and they were just like, I'll capitalize on it, I'll trade it. And I just looked at it with a bit of concern and caution, and I was just thinking, well, but is this a pump and dump? So now let's back up out of this for 1 second. Let's go back here. So this was today on CHSN. So how are the bad guys making money here? So they secretly acquire massive positions at a low price. Of course, they're not transparent. They don't tell you the price that they're in at. You have no idea. You don't even know if they're, they could be in at $0 a share. How would that happen? I'll explain in a moment. So these shares may be purchased on the open market following the IPO. In that case, the actual company is just a vehicle. The company isn't aware probably of what's happening. They probably don't really know what's going on. But in some cases, and we don't know which are which, in some cases, these shares could be issued directly by the company, and the company is involved. This is more common with OTC stocks. We've seen it a lot with pink sheet stocks. You talk about like Wolf of Wall Street, those kind of stocks. That's when the ultimate beneficial ownership can be disguised through shell companies, because the OTC market and the pink sheets don't have the same regulatory requirements of NASDAQ and NYSE. So the ultimate beneficial owners can be disguised through shell companies. They're in multiple foreign jurisdictions, which have very strict privacy laws, like Panama. So with those OTC companies, it's very possible that the people that are pumping it actually were involved in bringing the company to the public market and essentially have shares at a cost basis of nothing. So there was a story of someone who became the richest person in the world, technically. What they did, just to kind of prove how this works, was they created a company and they issued, I think it was like 1 billion shares. They created a company, issued 1 billion shares, or maybe it was 100 billion shares. It was an outrageous number of shares. So create a company, issued 100 billion shares, and then they went out on the street and they asked someone if they wanted to buy 1 share of his new startup for $20. And they said, sure. And so he said, okay, based on this, I have now sold 1 share, $20. So my 100 billion shares are worth $20 a share. Boom, I'm the richest man in the world, just like that. So that's good math. It doesn't really check out, but this is the type of stuff that we see some people try to do and try to take advantage of to work the system. And so in the OTC market, if you created a shell company and created 1 billion shares or however much it is, you put it on the market, and then all of a sudden you've got all these WhatsApp groups that are pumping the stock, you're in at zero. Any price that it goes to is a profit. And so now when you see these stocks that drop 90% in one day, at a certain point, you would think the selling would stop, right? Like when it goes down to $1 or 50 cents or 20 cents or 10 cents, but they're still selling. Are they still at a profit at 10 cents a share? Because if that's the case, then they were in from before the IPO. But I don't know in the case of CHSN. And I don't know in the case of these individual stocks because I'm not in the position to know. I don't know who owns these shares. I don't, ultimately, if a regulator really wanted to know, what they could do is they could go and they could figure out who was the person that placed this order right here for 100,000 shares, these two orders. Because that person clearly is involved in this, I would say, in this scheme. Now, it may be someone who is hired and doesn't know what they're doing, but most likely that ties in with this scheme. So regulators would have a way to find out. But as a retail trader, we don't have info to that data. So I don't know for sure, that position, what was their average price. Now, it's possible in the case of CHSN, this is a stock that now IPO'd quite some time ago. It wasn't really a recent IPO at this point. It IPO'd over a year ago. And then we had this pump and dump right here. This was the pump and dump. It drops all the way down. And then today was pump and dump round 2. They went back for the same stock. Now, some people said, well, this is actually a stock that, hasn't been trading on much volume in the last few months. 35,000 shares of volume a day. You wouldn't have been able to accumulate enough shares at this type of volume, you would think, for this type of pump. But, I could be wrong. In the past week, 200,000 shares, 300,000 shares. So there's been a little bit more. So could they have been accumulating in this area? I don't know. I really don't know the scale of how big it is. I don't know if they're taking millions of shares that they're selling on the market or they're just taking, I don't know. But if we look at this stock, XHG, this was one that had a dump just last week. And on this dump, it dropped about 90% in one day, as you can see right here. And as it dropped right here, this is unbelievable. Another Chinese stock. Look at all the volume. This is trading 1 million, 3 million, 4 million, 5 million. I mean, it traded at least 40 million shares of volume through this drop. So that made me think, 40 million shares of volume? Gosh, did those, people on the inside, were they actually holding 40 million shares? How much of that was them? How much of it was retail traders who got caught holding the bag and are dumping? Now, I'm not sure. But there are some other things that are going on with these pump and dumps. And I think now let's back this up. I'm going to move this up here. So now you get a sense of how the bad guys are making money. They accumulate shares one way or another, whether it's on the open market or it's somehow through the company issuing them shares, we don't know. But after the pump, we get the inevitable dump. Now, again, you have to differentiate the dump that we had on GameStop, so to speak, which was profit taking and maybe some people shorting, but was not part of a pump and dump scheme. So in order for this to be a pump and dump, the element that's required is this right here. What's happening here is there are insiders who have accumulated huge positions and are dumping on the open market. They are lying to you. They're saying, buy this stock, and they're dumping their shares. So this is the element here of that makes it a pump and dump that we didn't have on GameStop, right? GameStop was just, it was just an epic short squeeze. So this is the dump. This was MSS. This is a stock that same thing. Look, this thing went up to $24 a share, and then in one day drops from $16 to $1. And then here's another one. This was XHG from just the other day. Here's another one. This one, ATGL. It goes from, $2. It goes right up to 32. And this one was interesting because this was a recent IPO. So there wasn't a lot of time for insiders to accumulate, or I'm saying insiders, but the people running the scheme to accumulate shares. But it goes all the way up here to 30 and then comes all the way back down to 2. This is another one. In this case, this one kind of just started selling off right away. I feel like this one's sort of a flop. This one, EJH, goes up way high and then comes all the way back down. So this is the pattern that we keep noticing. It goes up and they slam down. These are the days where we're getting the dump. And most times what's happening is the pump is occurring just before the dump. So you get all of this pumping that's going on WhatsApp, on Telegram, on social media, and then that runs out, and all of a sudden the bottom falls out and the WhatsApp messages stop. Everything goes quiet. Now, you look at some of these and you're thinking, well, geez, but this is momentum. You know, this goes from 4 to 6 to 8 to 10 to 12. Should I not trade these? You know, is this just too risky? And that's a question, and we're going to talk about it. I'm going to answer that question, you know, to the best of how I feel about it today, and that could change in the future. But I'll kind of walk you through my opinion on it. This is another one. This one, you know, I mean, it's just unbelievable. These are the moves you don't want to get caught in, but it just keeps happening. Now, this I thought was fascinating. See how it pops up and then it drops? See, I felt like here they were getting kind of fancy. They push it up, and then immediately it drops. Now, so let's step back for 1 second. I'm gonna put this right here, and I've got another video that I want you guys to watch. This one's a little bit different. This is gonna talk about something that we've been seeing in the market, where these big hedge funds bully these stocks. They push them around to try to create a certain impression. And I think that some of those tactics that hedge funds have been using for a long time are now being used by some of the WhatsApp scammers. Let's listen in here. This is Jim Cramer. He's talking about, he's talking about his hedge fund. Let's listen.
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And
So here, this is kind of, this is what I'm wondering if we're seeing some of these scammers do. They're sort of pushing these stocks higher. And then as soon as they push higher, it creates this level of liquidity and volume. So we had this stock TNON. You may recall this one. This was another one that was absolutely insane. I mean, this one was unbelievable. Let's back up this chart. This stock literally goes, I mean, this is insane. So here, look at this. It goes on the first day from about $4 to 10, which by itself was impressive. The next day, it sells off all day long there. So it hits a high of about $10, drops all the way down to 4. Everyone assumes it's dead. And so what are shorts doing? They're shorting this fade. They're like, this is probably another Chinese pump and dump. I'm going to short it. I'm going to have a big winner. And then all of a sudden, what happens the next day? Do you see this candle? You want to look at how big this candle is? This stock went from $4 to $130 a share in 10 minutes. Holy smokes. Shorts got destroyed. But then what ended up happening? It comes all the way back down. So isn't that funny, right? So and here's the thing. It's like they push it higher and then they just sell into it. So the amount of volume that this required, these two candles required a total of 300,000 shares of volume. That was it. 300,000 shares of volume was enough to create those two candles. And then how much volume did this trade for the rest of the day? For the rest of the day, this ended up trading total volume on that day of about 25 million shares. And so the crazy thing here is sort of what Jim Cramer's talking about, how if they said, you know what, let's use 300,000 shares to jam the price of this stock up as high as possible. And then what's going to happen? Well, actual traders, retail traders are going to jump in Because for the most part, we're dumb money, we're idiots, and we just trade whatever's moving higher. And I mean, I'll admit it. If I see something hitting my scanner, I'm like, a dog with a squirrel. I see it hitting, and next thing you know, I want to jump in. And that's what a lot of momentum traders do. We try to capitalize on that volatility. So next thing you know, we're trading it, we're buying it, we're shorting it. And then all of that creates the liquidity that allows these insiders or these people that have accumulated shares just to dump their shares on the market. So I feel like they're laughing all the way to the bank. Now, I guess at the end of the day, if you were able to trade one of these and you walk away with 20 cents per share of profit on 1,000 shares, you made your $200 a day, you're doing that consistently, you don't have anything to complain about. You just got to make sure you know what you're doing. You got to be careful, and you got to make sure you don't get caught holding the bag on one of these, because they don't recover. Most of them don't. Now, I guess CHSN technically recovered today as it bounced back up, but that's an exception. It's not the norm. So let's back this up here. We'll jump back into the slides. So the big question is, should I trade these stocks? And for me, well, there's a couple, clearly there's volatility here. So can you profit during the pump? So if you know a stock is being actively pumped, you're hearing people saying, hey, I'm getting the WhatsApp messages, My opinion is I don't want to trade it, because I don't want to take trades that are essentially supporting the bad guys making money. I'm creating the liquidity by actively trading a stock that they're just planning on dumping. So while you could profit if it's volatile, I think it's best to just avoid these types of stocks entirely. But the reality is, we typically don't know which stocks are being actively promoted in pump and dump schemes. How would we know? I mean, unless you're on every single one of those WhatsApp groups, which, I mean, your phone would be blowing up if you are, you probably won't know. So that leaves us simply with trading the price action, but always being on alert for suspicious activity. So since it's more or less impossible to know every stock that's being promoted by social media campaigns and everything else, when I see a stock hitting my scanner, regardless of the sector, the location of the company, if there's an opportunity, I'll try to trade the front side of the move as the stock is going up. And when I say the front side, I mean I want to trade the beginning of the move before the first MACD crossover. So if you look at CHSN today, and really, I mean, if you're going to be a little more aggressive, essentially trading anytime the MACD is positive. That's the technical indicator that I'm using. So right here, the MACD was positive from about 1240 till it crossed over here. Went negative, went positive again. Went negative, went positive again here, and stayed positive until here. So that means this window was potentially fine. This window was potentially fine. And then this crossover here, nope, it's done. So that's a technical indicator that I'm using in my trading to help me focus on trading when I've got the highest probability of success, regardless of really what the exact company is. Could be any sector, could be Chinese, could be US company, doesn't matter. Trading when the MACD is open on the front side of the move, that's usually when I do the best. Now, I didn't trade this in this area. This halted too fast. It was in the afternoon, I did end up taking a trade because I was sitting down here, funny enough, to record this class, and I see CHSN squeezing up. And initially, I just thought this was momentum, and I thought it was a short squeeze. I thought it was a short squeeze because I checked the short interest, and I saw it was 28%. And I thought, 28% is not crazy high, but it's not nothing either, especially on one of these stocks. And this doesn't account for potential naked short interest, right? That's not going to be reported because that's not even supposed to be happening. So that made me think, well, maybe there's something here. Now, after I finished trading, and I ended up only making like $150 on it. Let's see. I'll pull up my P&L here so you can see. So after I finished trading it, I ended up doing my research and getting ready to record this class, and that's when I realized, wait a second, this stock actually. I found the WhatsApp message. So then I was like, oh boy, that's a problem. So I finished today up $5,008.26, which is a small green day. Only made 158 on CHSN. It wasn't anything serious, but nonetheless. So for me, my opinion is focus on your technical indicators. If you see something that's worthy of trading, take your trades. But as soon as you find out that it's part of a pump and dump, then at that point, probably the safest move is to step back and be awfully careful if you're thinking about shorting it, because they seem to know exactly how to trap short sellers. And the fact that they're able to trap short sellers with these types of moves, I think speaks to how much they control the float on these stocks. And the only way they control the float to that extent is by owning huge chunks of shares. Now, typically, if you own huge chunks of shares, more than 10%, you've got to file, you got to make, regulatory filings for that. But, I don't think that they're adhering to that. So now on the flip side, what about the dump? Is there an opportunity to short the dump as it comes back down? I was thinking the same thing. That's exactly what I was thinking back about a year ago when I had seen maybe 15 of these in a row. I was like, all right, it's time to start shorting the dump. These things keep going up and then they drop 90% in one day. It's easy money. Now, anytime you say something is easy money, it's not easy money and you're about to get, you're going to get your butt handed to you. And I almost did. So this is what I thought. I'm seeing these stocks dropping 90% in one day. I'm ready to participate in the action to the short side. All right, let's break the ice. So on CHSN, back like 6 months ago, I knew it was coming. I mean, I saw this ramping up and I was like, all right, guys, I'm going to look for a short position because this is ridiculous. All right, now, if you had taken a short position on this, a 5,000 share short position could have produced a profit of $80,000. A 10,000 share short position would have produced $160,000. So when I saw this on CHSN, I started thinking, all right, I want to short it. But here's the problem. In order to short these stocks, you need to know the following information. Number one, does it have short sale restriction? Number two, the availability of shares to borrow. And number three, the cost to borrow shares. So the short sale restriction, also known as SSR, although in some platforms it's listed as CB, is a restriction where if a stock drops 10% in one day, you cannot short the stock on a downtick, which means you can't hit the bid. So the bid is right here at 510. And if you want to short a stock that's not on short sale restriction, you could just sell right there to that buyer at 510. You could hit the bid and you're in immediately. But as soon as a stock is on short sale restriction, you cannot get in by hitting the bid. In fact, you have to sit on the ask and wait to get filled when a buyer comes and buys the shares that you are selling. You sell them short, someone buys them from you. It's called the uptick rule. And this was created actually a long time ago to prevent flash crashes. So now, if a stock is down more than 10%, you cannot hit the bid. The problem with these stocks is that once they start dropping quick. So instantly they're down 10%. So now you're dealing with trying to short a stock on short sale restriction that everyone wants to short because they're seeing it dropping. So every time it does pop up, even for a second, how many people are buying? Not many people are buying. People aren't even covering short. They're just holding. So it doesn't really bounce. It just keeps going lower. And every time it even tries to bounce, there's a wall of sellers in front of you. So essentially, I realized that if you wait for it to start dropping, you're going to miss the entire move. Secondly, you wait for it to start dropping. Well, most mid caps and large caps are easy to borrow, right? E means easy to borrow. But most of these small cap Chinese stocks are not easy to borrow. Let's check out CHSN today. Let's see if they had shares. So right here at Lightspeed, they have no shares available of CHSN. Even if you wanted to short it today, you wouldn't have been able to. There were no shares available. Now, at this broker, there may be brokers out there that engage in naked short selling. They're not going to admit it, but there may be brokers out there that, well, we know there are some that do. And there may be brokers out there that just have a better inventory of shares and that would have had it. But even if they have it, and most of them don't, well, if they have it, how much does it cost? So the problem with a lot of these stocks is, and I'll see if I can find another one we can check just to see what the prices look like. Let's see. So it's a little bit late. Well, it's after hours now, so I probably won't even be able to pull a price. But let's just say, for instance, when you start, if you want to borrow a stock to short it, then and it's hard to borrow, you have to pay your broker to go find those shares for you. And you pay the broker a fee, and the fee is per share. So let's say it's 20 cents per share to borrow 5,000 shares. So if you borrow 5,000 shares at 20 cents per share, that's going to cost you $1,000 to borrow that stock. So if you start shorting when the stock is still going up, you're going to pay $1,000 a day in borrowing fees. These fees are per day. But on the day that it starts dropping, the borrowing fees shoot up. In fact, if we go back to Ortex here, we'll see, where is it? It's right here. if we look at Ortex, let's look at the rate. So the cost to borrow has been increasing over the last 3 months. Well, it's down over the last 3 months. Over the last 7 days, it's up, it looks like about 8%. Cost to borrow, 17.26%, which is not outrageously high, but I bet by tomorrow, we'll see if, is it going to give us any live? So it says live has gone up to 31%. Cost to borrow increased to about 23%. So it's high. I mean, the fact is the cost to borrow the stock is expensive. So now if you decide you want to start shorting it during the pump while it's still moving higher, you're shorting as it's going higher, which is kind of like the only way, because if you wait for it to drop, it's on short sale restriction and the cost to borrow has doubled or tripled and you might not be able to get in at all. So if you want to short it, you kind of have to short as it's going higher. And that feels like playing with fire, right? So I felt like because of the way I'd seen some of these just moving higher and higher and higher, adding short into strength, golly, you're asking for trouble. I mean, you're trading literally against the trend. And this is where most people would be better off just trading to the long side, right? Making the money, trading to the long side. So adding to something as it goes higher works until it doesn't. And that's why short sellers that have that strategy usually have like 90% success, but their average profit, their profit to loss ratio is so inverted because when they lose, they get blown up. Look at this. HKD. This stock went from $3, $4, $5 a share to over $2,500 a share. And this one, I don't know whether or not there was a WhatsApp group promoting it, if there was a pump and dump. I'm not sure. I don't recall I never really found out. So I don't know. It's possible. It was a Chinese stock. In any case, if you had a 5,000 share position, it's not even a big position, that could have produced a loss of $12.5 million. Now, in my entire career, I've taken an account with, less than $600 and turned it into more than $10 million in verified and independently audited trading profits. And imagine just for a second, if I took all that profit and managed to lose it all in one day on one trade. I don't even know how, honestly, I don't even know how I would recover from that. I don't know how I would. A 10,000 share position on this could have produced a $25 million loss. And you think, well, Russ, okay, you're not going to lose $12 million. You know, you'd cover the position. You get out, pretty quick. That'd be fine. Well, wait a second. Don't forget, you know that brokers can auto liquidate you, right? So if your account goes into the negative because you traded on margin and leverage to the long side, or you took a short position, which is on leverage and margin, and it goes up too high, they can auto liquidate your account. So GameStop, of course, resulted in Melvin Capital basically being auto-liquidated by, I think, Citadel for a loss of $6.8 billion, round up to 7. So that clearly is not going to work. Now, let's look at this particular stock. This is a stock that dropped about 80-90% in one day. And I kind of thought, chasing made more sense on this. You can't short into strength. You're better off waiting for it to start dropping and just try to get filled. But I didn't have the guts to do it. And I was like, I don't know. So of course, I'm a little bit too risk averse to do this. So anyways, it ends up dropping here down to 14 and then it ends up halting up. So when a stock halts up, what happens is trading freezes because the stock has gone up more than 10% in less than 5 minutes. So it instantly squeezes up. And so if I show you on the whiteboard what this looks like, we've got the bid and we've got the ask or the offer. So let's say the stock halts up at $5. So the last price was $5 and then it's halted. While the stock is halted, all of a sudden, what if you see a price of $50? You see a price of $50 a share and you're like, how is that possible? How did this just go from $5 to 50? And the way it goes from $5 to 50 is first, the stock is halted and it's going up. And so all of a sudden it's up, it's halted at $5 and people want to buy it. So they put out orders to buy at 6. And then someone puts out an order to buy higher at 7. And someone puts out an order to buy higher at 8. And people keep bidding against each other even when the stock is halted. But there's no trading that's occurring. So if there's no one selling, the sell orders are all gone because people cancel their order. And the reason people would cancel sell orders is because typically when stocks halt going up, they open higher. So if you're already in, usually you cancel your sell order and let's see how high it opens, right? If it opens really high, you're in great shape. So they usually halt up and they open higher. So it halts up at 5, and all of a sudden it's showing a resumption of, $7. And then the person at 7's like, well, I'm going to cancel my order. And then there's another buyer and their order's at 8. And now all of a sudden it's showing, let's say, a $10 resumption. So now imagine you shorted 10,000 shares of this at 450, thinking that was the top. And it's showing a $10 resumption. You're down $50,000, minus 50 grand in the red. Now, what if you only had $25,000 in your account and you were trading, this was a trade you took on leverage, let's just say, for instance. So now your broker is going to say, uh-oh, you're down $50,000. Now, maybe in this case, you're okay. So you're not at a margin call yet. So the stock resumes at 10 and immediately squeezes up to $14 a share, or $12 a share, let's just say, and it halts up a second time. And now the resumption is showing 18. Uh-oh. You're now down over $100,000, which means right now your account is in the negative. So the broker comes in, they're like, auto liquidate. Person is showing unrealized P&L that far exceeds their cash balance. And so what does the broker do? They take control of your account and they say 10,000 shares, buy. 10,000 share buy order. And this person at 18 says, hey, I'm going to cancel that order. Next seller is at 20. They cancel the order, and that buy order is still out there because the broker needs to cover the loss. And now they're saying 25. And the next thing you know, it's showing 30. It resumes at 30. Maybe they buy back some of your shares, but it instantly goes into another halt at 33. And now it's halted again, and it's showing now a $40 resumption. And you're still in with, let's say, 4,500 shares, whatever, doesn't matter. You're still in the partial position, so the broker's still got another buy order out there to cover more. Now, at a certain point when these get outrageously high, some other short sellers will say, yeah, I think this is the top. I'm going to short it for the move back down. And then you start getting some sell orders that come in and they say, I'm going to sell it at 39. I want to start shorting this. I think it's going to drop. And maybe it ends up going down. But maybe what happens is all of a sudden those WhatsApp scammers come in and they send out a buy alert telling everyone to buy it at $40 a share. And then what does that do? Boom. All of a sudden, it's showing a $60 resumption. So what happened in the case of ZJYL, and this was another WhatsApp scam stock, is it halts down like 4 times in a row. Then all of a sudden, buy. It goes up to 1250. It resumes and it instantly halts up and it goes to 25. It's halted at $25 a share. And now those people who shorted 5,000 shares up here thinking they were really smart, like me, but were really dumb money, we're idiots. All of a sudden, they're seeing this stock showing a resumption. You want to know how high it was? Not 50. $500 a share. $500 a share. That was the resumption price. The WhatsApp scammers won. And unfortunately, that high halt resumption triggered mark-to-market unrealized losses. Those losses exceeded the equity balance of traders' accounts, requiring auto liquidation at market price. That pushed the imbalance even higher to the buy side, created huge losses for short sellers, and it resumed at $500 a share. A 5,000 share position would have resulted in a $2.4 million loss. 10,000 shares would have been $4.8 million gone. Just like that. Because you were playing with fire. Because you're trading a stock that's part of a pump and dump. Because you're trading one of these Chinese small caps. Now we don't know whether or not well, actually we do know with ZJYL, but we don't know in every instance whether or not a stock is involved in a pump and dump. So one thing that I would say is that shorting any of these small cap stocks carries, for me, an unacceptable level of risk. And I'm going to put my money where my mouth is here and tell you that I'm not going to short these stocks. I'm not just saying this because, I don't know. I'm going to tell you I'm not going to do it. I don't want to take the risk. I don't want one trade to ruin my career. It's not worth it. I've been doing this for too long. I haven't been interested in the market for 27 years to get blown up in one trade like that. It's just not worth it. Now, will I trade some of these to the long side? I will. I will trade some of them to the long side. And here's my opinion. Right now, I've got about $195,000 in my account, about $200,000 in my account. I've produced, at this point, well over $10 million in net profit. So if I lose the whole 200 grand, which is really the worst that could happen, I bought a stock and it goes to zero, I can recover from that. I don't want to have that happen. but I could recover from that. Recovering from a $3 million, $4 million, $10 million loss, a $20 million loss? No. I'm not going to put myself in the position where that could happen. So the way a stock went from $25 a share to $50 a share, in this case, was an interesting combination of intraday short interest, high short interest, with the pump and dump organized by these international traders or these international, criminal organization. So it was sort of a combination that came together. We had short interest and a pump and dump. And that's kind of what happened today on CHSN. There were definitely short sellers that got smoked on CHSN. So they underestimated the power of the WhatsApp group. So shorting exposes you to an unlimited loss, not to sound like a broken record. So in my opinion, while I understand the desire to profit on the dump, I think the risk of shorting these stocks really, it does outweigh the profit potential. So whatever you choose to trade, just make sure you're managing your risk. Now, let's talk a little bit more about the companies. So why is it that we continue to see Chinese companies being used in these pump and dump schemes? Why is it always Chinese companies? So it tends to be international companies, predominantly Chinese, that are listed on the NASDAQ and NYSE exchange, and they have similar underwriters, and they're usually somewhat recent IPOs. Why international? So understanding the financials of international companies is more complex and difficult than US companies. Different currency, you've got exchange rates, and there's a language barrier. If you're looking to do your due diligence on a US company, you can call the US auditor who follows US accounting rules and who is obligated to follow US laws, and you can understand what that company is doing. Now, it's not to say that there haven't been, huge companies in the US like Enron that have, or Bernie Madoff that have managed to do crazy things under the radar. But for the most part, US companies are held to a pretty high standard, and you have resources to actually do your due diligence. But with a lot of international companies, especially small companies, when there's a language barrier, you may not be able to even get on the phone with the operators of the company or the auditors or the tax authorities to find out whether or not the numbers that are being put out there are a little fuzzy or if they're real. Now, some of these companies are completely legit, and the company is just being used unwittingly, unknowingly, as a vehicle for these schemes. Now, in other cases, the companies may be complicit, and I don't know. There's no way for me to know which one is which until at the end of the day, regulators, come to some conclusion and, do an investigation. So in the meantime, you have to presume that they're all innocent and they don't know what's going on, and that it's just these criminal organizations that are using the company as a vehicle. But I think that there is a reason that they're choosing these international companies, right? There's got to be more to it. So then we look at the underwriters for these companies. Now, when a company wants to become publicly traded, if I want Warrior Trading to become publicly traded, just for instance, I can't just go and be like, hey, NASDAQ, can you just sell my shares? You need an intermediary, and the intermediary is an investment bank that you go to, and the investment bank does the underwriting where they do the due diligence on your company. They look at the audits, they look at your financials, the business model, the business strength, everything else. And they actually buy the shares from you, and you get the money from the underwriter. And the underwriter turns around and sells those shares on the market. And they stand to profit or lose if they didn't price your shares correctly. Now, sometimes when you have a stock where the underwriter prices it low, then the company only gets, let's say, $5 a share from the IPO. But then when the price actually starts trading, it's trading at 10. And it's like, oh man, the company got shortchanged on that. The underwriter did well, right? And some of the institutions that got in at a low price did well. Insiders, I suppose, that didn't sell, can do well. But anyway, so the first step is the company has to contact an underwriter. And so the investment bank, which is the underwriter, does their due diligence. They then buy the shares from the company. Proceeds go to the company. And the investment bank resells those shares on the public market. Now, most of the investment banks will get a warrant or an option to buy their own shares of the company that they can also sell. So they get a commission for bringing the company to the public market. It's like 5%. It's higher in small caps than on large caps, but in like a large cap company, it's 4 to 8%. And then they also get the option to buy shares, which they can then sell on the open market. Now, whether there's a lockout period or not, that's going to depend on the terms of the offering. A lockout period is when you have the IPO date here, and then for 90 days, usually it's 90 days, insiders and people that sometimes got these warrants can't sell. So they have to wait 90 days to show they really believe in the company, and then they can sell. So if the price goes up, but usually what happens at day 90, boom, usually it drops. So this is very common with IPOs. You get the IPO, 90 days, and then they drop, which is fine. They often recover after that if it's a good company. But with a lot of these small cap IPOs, well, that's not always the case. So the underwriters, when you think about, I don't know, like Airbnb or, Facebook or Tesla or, these big companies, when they IPO, it's like Morgan Stanley, Goldman Sachs, UBS, Citigroup, these big banks. Of course, we already heard from our friend over at, he was at Morgan Stanley. So, no banks are perfect. We know these big banks, have their share of issues, but nonetheless, they've been around for a long time, and they're going to hold most of the companies that they IPO to pretty high standard. But usually the small caps, they get IPO'd by sort of small boutique broker-dealers, investment bankers who cater to this area of the market. And some of these smaller broker-dealers kind of have a track record of IPOing really low-quality companies. And I say low quality based on, let's look at their track record. So let's go back to this. So EJH, just for instance. So these are some of the recent IPOs. So if you look at EJH, I'll just pull up the chart on this. EJH, this stock, if we look at the daily chart, it's unbelievable. I mean, it just keeps dropping. It's like there's no floor. It just goes lower and lower and lower and lower and lower. So then you're like, who's the investment bank that, thought this company, they're trying to make money just like every other bank. So if a company wants to go public, they'll bring them in the public market, and then it's the company's job, not to suck. And I guess people don't think EJH is so great because the price, it just keeps dropping. But anyway, so let's look at the underwriter for EJH. So the way we find that out is we can actually go into BAM SEC. I like using this platform. I'm not an affiliate. If you want to use it, you can use it. If you use something else, you can use something else. But EJH. So I look at the ticker, and then I look at the prospectus and registrations, and I usually go back to the initial offering. And this is a foreign company, so it's in China, of course. So then what I usually do is I'll do a keyword search for underwriter, and you can see the underwriter's warrants. So they got warrants. Well, actually, there's nothing listed here on this one. So no, they do have warrants. So anyways, but unfortunately in this case, there's a lot of it uses underwriter quite a bit. This looks like the name of the company. So then most of the underwriters are an LLC. So I'll just type in LLC. And then here we go. Underwriter, Joseph Stone Capital. So Joseph Stone Capital was the underwriter for EJH. So then I say, all right, well, that's not been a particularly good IPO. So let's go ahead and just look at other companies that this underwriter has been the underwriter for. And when I do that, all of a sudden we have this list, EJH, MSS. So then, let's look at the daily chart on MSS, just out of curiosity, MSS. So MSS, okay, there's that liquidation event, right? That's the dump. So this was a stock that was probably used as a vehicle for a pump and dump. When you look at that candle, that's the pretty safe conclusion based on what we've seen from these WhatsApp scammers. They also did CHSN. So CHSN was Joseph Stone Capital. So then let's see, GV. GV is a NASDAQ listed company. So GV, we check that one. And what you'll notice is that you're going to see a pattern where, a lot of these are, and I'll close these all out just so we can be full on the daily. So you'll notice that a lot of these are going to have sort of that similar chart. All right. So I'm going to just go to auto, and yep, it's another pretty ugly chart. All right. So what else do they have? BTBT, Bit Digital. This is in the Bitcoin space. BTBT. So let's look at this one. This one, not great. Not as bad as some of the others. So, that one could be okay. Let's see, MFI. We look at MFI. And so then if you're sitting down and you're thinking, all right, so that's a pretty bad one, liquidation event there. So then you're looking at some of these and you're thinking, geez, CCTG. All right, right. So we already know about CCTG. We saw that one at the very beginning of this class. CCTG was the one that I got the text for. So that was the liquidation. So, you kind of notice this pattern. This is another one, prime number capital, MHUA. So we can look at MHUA. This is a different underwriter. And, these are companies underwriting small cap stocks. And some of these small cap stocks end up not doing so well. Now, they're in a higher risk area of the market. They did ZJYL. So ZJYL, we've already looked at that one. I'll show you the latest chart. So, this area of the market, well, what goes up comes back down. I mean, it depends on how pessimistic your outlook is. OMH, I remember that one. So OMH. Okay, so, another kind of liquidation event there on this one. Then you've got Spartan. They did SUNL. That's one that we noticed. They had PSEC. They've had a few others, CCLP, IVP, MOBQ. A lot of these are pretty unattractive charts. So I suppose if you're going to be fair, probably any underwriter primarily doing small caps is going to have a similarly low track record, because a lot of these small caps don't end up doing really well over time. Univest Securities is another underwriter for small caps, SLNH. Not all of these are Chinese. Some of these are just small cap stocks that, have kind of had their day in the spotlight and then have come back down. But some of them are, particularly bad. BTOG, I remember that one, SFWL, ELAB, LICN. I mean, there's a lot of familiar names on this list. Now, the thing is, if you're looking at a stock and you're starting to ask, is this a stock that has a high likelihood of, the company being used as a vehicle for a pump and dump? The question that I'm going to ask is, number one, is it a somewhat recent IPO? Is it a Chinese or international company? Because if it is for those two things, then you've got a higher likelihood that this could be involved in a pump and dump. If it's not either of those two things, then you're in better shape and still not totally out of the woods. And ultimately, you can search on social media and try to find out on, just searching on Twitter for the ticker name and WhatsApp to see if other people are posting that they've been getting these WhatsApp messages. You can ask people, of course, in our chat room if anyone knows. Sometimes they do, sometimes they don't. So I think at the end of the day, it comes down to managing risk. Can you manage your risk? You want to trade volatility, you want to capitalize on the opportunities, but you don't want to overstay your welcome. And you want to make sure you know when to get out. And you don't want to be caught holding the bag. We've got a lot of stuff going on in the market right now. We've got the naked short selling. We've seen what some of these hedge funds do where they push the price higher only to fade it back down when the real volume comes in. We're now seeing the WhatsApp scammers doing the same thing. So I think in general right now, you have to approach trading some of these stocks with a bit of skepticism. And I hope that the biggest lesson for you here is to always know your stop, to know how to bail out of the trade, and do not be a bag holder on these stocks. If they start dropping, the way I approach it is I cut my losses. I got to be ruthless. I got to cut my losses. I got to get out. I do not want to overstay my welcome. It's just not worth it. There will always be another trade around the corner. So I just cut my loss and move on. But if I'm focusing on trading the front side of the move when the MACD is positive, that's the area where I'm finding the most success. And if it happens to be a stock like CHSN today that later I found out was part of a pump and dump, then it's like, well, man, I didn't know that at the time, but it doesn't change the fact that the technicals support the trade. I just had to know where's my exit. Now, when you're actually watching some of these trades, you'll notice some funny stuff on the level too sometimes, right? You'll notice some big sellers, some big buyers that are kind of trying to encourage people to get in and then they pull the order. When I start seeing that type of action or I start seeing jackknifes, then I'll just stop trading the stock entirely. Because at that point, I recognize I can't manage my risk. And if I can't manage my risk, it doesn't matter how much I could make. You always have to think about your downside risk first, because after all, trading is risky. And you know what? These moves, some of them are creating a lot of volatility. There's definitely some opportunity here, but just make sure you're thinking about your risk when you're taking these trades. If you found this episode helpful, I hope you hit the thumbs up. I hope you subscribe to the channel for more episodes about trading strategy just like this. And I'll see you for the next one real soon. I'll remind you as always, trading's risky. My results aren't typical, so manage your risk, take it slow, and we'll see you back here real soon.